Last year, the City of Toronto and City of Ottawa have approved implementation of a so-called vacant home tax, which should help boost housing supply and contribute to fighting affordability. Toronto is expecting that it will generate around $55 to $66 million of extra revenue from this tax, which should be used for affordable housing initiatives. Now, if you are wondering how this new tax really works, how much it's gonna cost you and what everything you need to do, this video is definitely for you. Hey guys, Norbert here. So Canada is quite famous that everything is taxed left and right, and there are dozens of different taxes on pretty much everything here. Vancouver has implemented as a first city in Canada a vacant home tax back in 2017, and since then it has been increased 3 times already, and the vacant home tax rate right now stands at 5%. Now, following the implementation of this tax in Vancouver, number of vacant properties declared by homeowners has been reduced by 36%. So if you take into consideration that based on the staff report from June 2017, Toronto estimates to have 15 to 28,000 vacant residential dwellings or units. And if we would consider same impact of the new vacant home tax as it was the case in Vancouver, Toronto real estate market could potentially see 5,400 to 10,000 residential units, apartments or homes available either for rent or for sale. The idea behind it, as I have mentioned, is to create pressure on housing affordability in the city, not to necessarily look for different ways how to generate extra tax revenue. There are other larger cities currently exploring the idea of a vacant home tax, like Mississauga or Windsor. In Ontario, Windsor specifically just recently sent out mail to all homeowners with a survey about the possible vacant home tax. And talking about Windsor, this is one of the cities I know about where it actually might have some impact because of large amount of abandoned houses, especially around the area of the entrance of Ambassador Bridge. Now, the question is, how will basically the City of Toronto determine if you qualify for a new vacant home tax or not? Every homeowner of a residential unit, not a vacant land or a parking space or a condominium locker, needs to submit a declaration of occupancy status either electronically or by mail annually. However, if your property is your principal residence, or principal residence of a permitted occupant or tenant, or properties that qualify for an exemption, I will get to the exemptions later in this video, the new tax doesn't apply to you. So, if you have owned a property which is not your principal residence and this property has been vacant for more than 6 months during previous calendar year, you will be subject to this new vacant home tax. Also, if someone fails to submit the reporting, these properties may also be deemed as vacant. So, to sum it up, everybody owning a property in Toronto has to submit annually a declaration of occupancy status, no matter if it's your principal residence or not. And this might be a pretty big misconception where people really think, well, I only have one property where I live in and this is my principal residence, so this doesn't affect me. This is completely wrong since everyone has to submit this declaration. Now, what might happen if you actually don't report? So you can either file your reporting after the deadline, which was set for February 2nd of this year, and this late filing will cost you $250 in late filing fee. If you don't file at all, and as I have mentioned before, your property can, and I think most likely will, be deemed as vacant and you will be a subject of the new vacant home tax. Now, there are a couple exemptions which might apply to you even though your property has been vacant for more than 6 months, but you will still not qualify for the new vacant home tax. Number one is if you have been renovating your home and you couldn't live inside and you have all the required permits. Number two is if the principal resident of the vacant property is in a hospital or a long-term care facility. This type of exemption can be claimed for up to 2 consecutive years. Number three is where the property was vacant for more than 6 months because of the death of the owner. Number four is transfer of legal ownership. Number five exemption is when there is a court order in place which prohibits occupancy of the property for at least 6 months. And number six is occupancy for full-time employment. So the city will certainly certainly adjust some of the requirements down the road, but if you are planning on taking any renovations, for instance, which might be time consuming and you will gonna pass the 6-month mark, keep all your permits ready because you will need them with your next filing. Guys, all your support is greatly appreciated, so if you are finding value in this video, please support it with a like, and I also consider subscribing to my channel not to miss out on similar content like this one in the future. Alright, so let's move on to how is the vacant home tax actually calculated. So the city has set the vacancy tax rate for first year at 1%. This means that you take your CVA, which is your current value assessment, which you see on your recent property tax bill, as a base to calculate the tax. Let's say your CVA of your home on your recent tax bill was $950,000 and you declare that your unit has been vacant for more than 6 months in 2022. Your vacant home tax will be 1% out of $950,000, which is a tax of $9,500. Since it is based on the property occupancy status for the previous year, which is 2022, tax will be payable in 2023. And once processed, the city will send out new tax bill around April or May, and it will also include the new vacant home tax. The question is, of course, who would even leave a property vacant when you can rent it out and generate additional income, and on top of that, when you need to pay all the property taxes, house insurance and utility bills? Well, this is a matter of fact. However, there are thousands of investment properties sitting empty, not only in Toronto, but in a majority of major Canadian cities. There is a huge number of foreign real estate investors, for example, who bought properties, in many cases multiple properties, as an investment just to park their free cash flow and take advantage of the appreciation down the road without any intention or necessity to rent them out. I personally believe that this might be one of the groups being targeted with this new vacant home tax, like it was the case in Vancouver back in 2017. Now, if you are wondering how actually this new vacant home tax will be enforced, for first, City of Toronto is adding 25 new staff members who are in charge of administering the tax and carrying out audits as well. So your property can be randomly selected for an audit, for example, and you will be asked to provide all the supporting documentation showing that your property has not been vacant for more than 6 months during previous calendar year. Also, the city can use information from different utility providers like hydro, gas or water to determine if there is either very low or no usage in particular properties, and based on this carry out an audit. I am pretty sure they will find a way like they always do. Alright guys, thank you for watching. Hope you found value in this video. Take care and I will see you in the next one. Bye.